Per usual, living on this channel for educational purposes only and is not intended as financial advice. It is Setup Sunday here. Once again, a summer Setup Sunday. Not much going on. We have a little bit to talk about, but there's not too much going on. Big thing this week, of course, is going to be US CPI Wednesday morning, 8:30 EST, followed by FOMC, which is when J-Pow gets on the big podium. We get to decide how hawkish or dovish he is based on his tie or his Apple computer. Realistically, though, unlikely to cut rates this meeting. Potentially, he will hint at further forward guidance. Who knows? Unlikely to make any promises. BTC ETF inflows were up last week. A lot of people asking, why isn't price moving? Is this a scam? What's the giant conspiracy? Is this Coinbase colluding with BlackRock? I don't think it's any of those things. A long-term holder selling narrative emerged, posited by Capriol. I don't think that's completely correct, but partially probably an explanation. We also have the CME futures basis trade to discuss. A lot of people unaware what's going on there. I see a lot of very ill-informed people posting the same chart while I try to dunk on Zero Hedge for not knowing what they're talking about. We're also very much ahead of schedule in regards to halving. We'll take a look at that chart. We'll take a look at technicals, of course, across the board. Most of the legacy stuff I'll save for Monday, but we'll look at DXY as well as a few trade setups for legacy. Here is the long-term holder chart. This is on-chain data. Back in the day when it was just a few folks transacting peer-to-peer, the on-chain data was much more pure. It was purer. 2014, 2017, even probably up until 2021, I'd say the data was certainly more reliable than not reliable, in that the signal was what you see is what you get. Currently, we've got the ETFs muddying the waters. We've got the Grayscale ETF unloading, or have unloaded a bunch of coins that will change on-chain data, as well as the Mt. Gox coins that will change what on-chain data looks like. And he mentions that here, so he's well aware of that. So it's hard to pin down exactly long-term holders. Why would they be selling here? We're bullish, we're post-halving. Well, a lot of people missed selling the last highs in 21. Times change for people who need cash. You can't buy Bitcoin. You can't use Bitcoin to buy things. You have to sell Bitcoin most of the time. Even if you use Bitcoin to buy things, the merchant you are buying something from, or the other person, is likely selling that Bitcoin for cash anyway. This blue line here is the last active 2-year plus on-chain line. So you can see in 2017, we had people selling into that. In 2021, a lot of this was actually miners. In 2017, a lot of that was Roger Ver. 2014, I don't know exactly who that would have been necessarily, but you get the point. Each cycle, we hit somebody's number and they're selling, right? So this time around, it's a combination of a lot of stuff. It's not exactly one thing. My guess is the Grayscale outflows certainly playing an outsized effect on this specific data point. So it's still possible, right? And we see stuff like this all the time. I see this and I kind of roll my eyes and I groan. And this is coins on exchanges, okay? First of all, coins are about 10 minutes thereabouts from hitting exchanges at any given time. Is it more bullish than bearish to see coins leaving an exchange as a percentage of an exchange balance? I'd say it's more bullish blindly, right? Does this tell the whole story? Probably not. It doesn't include staking. It doesn't include custodial, institutional wallets. It doesn't include a lot of stuff. I consider it roughly a useless data point. Interestingly enough, if you zoomed way out on this exchange data in, for example, 2017, you'd see coins coming back to the exchanges. So it's even more bullish to see price still rising with people selling. That just means demand is greater than supply, right? So I don't know how useful this really is, right? Price will go up regardless. It's been declining. These balances have been declining for a long time. I don't think it really tells you anything personally. Plus you've got restaking, you've got DeFi, you've got all this other stuff you can do with your coins. That's not just buy and hold. So long-term holders certainly playing an effect in selling here. That's an issue. This is the Zero Hedge chart where, they tweet a bunch of stuff all the time. I have no idea what they're talking about. They've done so for many years, but they're specifically hammering this over the past couple weeks. fine. Like, look, it's undeniable. The leveraged funds net total combined is at a record short level. This is CME futures. What this likely represents is not someone with a directional viewpoint, not someone saying, in the hedge fund world, I'm bearish this Bitcoin junk, it's probably going to zero. What they're probably doing is seeing a funding trade that they can take advantage of, a type of arbitrage. And this is even more important when we're thinking about the ETF flows, because what they're probably doing, what's probably easiest for them to do, is to long BTC on the spot side via the ETFs, and then short this on the future side. And that's what we're seeing represented here. We can dig a little deeper. By the way, Block has this data as well. If you're curious and you want to watch this for yourself, you can see this in the commitment of traders data that the CME puts out every week. And we can see the hedge funds here going increasingly negative. And the reason they're doing this again is because of the basis trade. This is the funding they are capturing by longing spot, shorting futures. You as an individual can of course do this if you have enough money, millions to billions of dollars, which really limits the pool of people here, right? This is mostly TradFi, not retail people. You can do this on centralized exchanges, decentralized exchanges as an individual. Athena, the protocol, is doing this on multiple exchanges, packaging it, tokenizing it. So there are different ways to take advantage of this. But when you're trying to remove most of the risks, you're probably doing this via ETF, via futures on the CME, right? Now, what you'll notice is there was plenty of short interest here before the ETFs launched. The ETFs launched beginning of the year, right? So my read on this is most of the new increases in short interest are probably the basis trade. The basis trade is profitable so long as funding is higher than the risk-free rate, which is around 5%. This is around 10 to 14%. It's been rising, right? So it's getting more attractive. So of course, that's again why we're seeing a rise here in basis trading. That's probably why we're seeing a rise in inflows in the ETFs. So the TLDR of the TLDR is nothing you see is exactly what it is. You really have to dig a little deeper and look at, okay, what was CME short open interest this week? Was it rising? Was it falling? What does the basis look like? If the basis is falling, if the ability to capture the funding is falling, then we will probably see outflows in the ETFs, regardless of what's going on with price. We will probably see outflows from multiple products, inflows into GBTC. That's probably related to this trade as well. So nothing is as it seems, unless you really know the entire picture of what's going on here. This data, admittedly, is probably not exactly correct. This is probably wrong, but just to give you some sense of what's going on, if we take the cumulative flows, ignoring the basis trade stuff, that's what we get in the yellow. If we include the short OI, this is again a rough estimate based on new short OI since ETFs launched. And then we combine that for the net flows minus CME, we get this value, right? So all of a sudden, to me, it becomes a little more clear why we are not moving, because realistically, yes, OI or net inflows have jumped a little bit, but in general, subtracting out the CME short basis stuff, we kind of haven't moved all that much. We've basically been flat since week 8, right? Whatever 100 days is on this chart. So you're going to get people bamboozled on all sorts of ways, bamboozled thinking, there's going to be some massive short squeeze when Zero Hedge keeps posting this. You're going to get people bamboozled on the ETF flows when a lot of that is basis trade, right? There's leverage in part of this as well. So it's almost impossible to really know what exactly is going on. You can get a rough sense of what's going on here, but to nail it down entirely is very difficult unless you're directly involved in what's going on. So yes, we've seen weekly ETF flows rise. Great. Why am I talking about this week versus previous weeks? Well, because I'm seeing a lot of people talk about this rise in leverage short OI. The other thing about OI, a lot of people talking about open interest. Well, yes, open interest is at an all-time high. Guess what? Why is it at an all-time high? A lot of that's the basis trade. A lot of that is not a directional bet. A lot of that is just looking at what the annualized funding is and capturing that. Also, on the crypto side, right? So that's just the TradFi side, that's the CME side. But on the crypto side, we're seeing a rise in OI because of the Athena protocol and that basis trade and that funding ARB capture, whatever's going on there, right? So it's true that OI is at an all-time high, or at least it was. Is it the same warning sign as leverage in the ecosystem? Perhaps, but it's a different type of leverage. It's not directional bets. This gets confusing and wonky if you have no idea what I'm talking about, but don't just assume that this is, a fresh nearly 2 billion making a directional bet on the direction of Bitcoin, right? that isn't necessarily what's going on here. And it's a two-way street. When we start to see outflows, like I said, that isn't people giving up on the idea of the future of Bitcoin. That's probably the basis trade starting to collapse a little bit, if I had to guess. But that's something we're going to have to watch going forward. If the basis trade goes below the risk-free rate, we probably start to see outflows, right? That's the hypothesis. So that's something to watch for coming up. This is cumulative flows. We're well above 15 billion now. GBTC outflows have slowed a lot, basically crawled to nothing. This is net flows. Again, if you're part of that basis trade, I don't know how much you care about the GBTC fees relative to liquidity and compliance and risk and all this other stuff relative to how much money they can throw at each ETF. That's a whole nother ball of wax. So things are certainly getting more complex, right? It's not so straightforward as, oh, here's 2 billion in BTC. It's a conspiracy. Why isn't price moving, right? There's probably a reason for that. And this is part of the explanation. The other part of this is weeks relative to halving. We're a little bit early. Like I said, you can see the previous halving periods before and after. Most of the action comes somewhere between, let's say, week 10 to week 25 after halving. So we're early. We're on week 8. We got time, right? As far as the legacy stuff goes, we had a bunch of cuts this week from global central banks. Charlie putting out great data. A cut from Denmark, a cut from Eurozone, and a cut from Canada. ECB kind of abandoning their inflation targets. There have been whispers for many months in the US that we're going to eventually abandon our 2% target and we're going to shift towards some band, whether that's 2 to 3.5, 2 to 3, whatever it is, right? That's a win for us on the Bitcoin side and a loss for savers at the end of the day. So the global easing cycle certainly has begun, and that puts into question the bearish Dixie idea. Now, we did have this head and shoulders that I don't have drawn on here, but shoulder, head, shoulder started to break down as Canada and the ECB were hiking last week. DXY turned around. Technicals for this still range bound, less bearish, I guess, than it was last week. And it really doesn't matter until Wednesday. Wednesday, we're going to have a move on this, likely one way or the other. Maybe not definitive, but this will probably move one way or the other, and Bitcoin will move the opposite of that. We had a 2% down day on Friday, thereabouts. On BTC, alts got clobbered. It's just still not the time for alts, at least on leverage. BTC was down 2, alts were down 20, right? Like, it's hopefully pretty obvious for most people at this point what's going on. We also have this risk coming back to the forefront with UJ. And again, for those not following, why is this important? Well, if this gets out of control, the Bank of Japan is more likely to sell US bonds, US treasuries, whatever they have in their treasury to right this ship. And that means higher yields on our end of the pond. Higher yields mean more issues for risk assets, aka bearish risk assets. So there's a lot of reasons why it's best if DXY just chills out for a while. And it's going to depend on what Powell says on Wednesday. If Powell says, the data we've seen, we're not going to cut until at least next year, right? He's not going to say that, but if he did, that would be a problem because we would be cutting last relative to everybody else. And that's already going to happen anyway. Everyone else has already started cutting or will start cutting. We will be more hawkish for longer. So it's going to be very interesting to see how this DXY direction plays out. Before we get into the Bitcoin TA, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of the video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. Most coins on the BTC pair have done quite horribly, consistently, for many, many weeks now. Monero, one I don't see too many people talking about. There's always a few Monero diehards left out there. They're always quick to point out bullishness on this chart, but this has maybe attempt maybe attempting a bottom here, right? Maybe tried to attempt something, or it's attempting something. Trend is still very much bearish. This took a spill once Binance announced it was delisting Monero. That's always a risk for something with the regulatory burden that Monero tends to carry. All right, looking at BTC, everybody knows what the level is. It's 72K, above 72K, and we're probably off to the races. Chart pattern wise, this could be inverted head and shoulders, cup and handle, bull flag, bunch of stuff. Volume still declining. We have a little wiggle room down to, let's say, 64K, which is the daily Kijun. Further wiggle room going from bullish to neutral down to 56, below 56, and that's where I get bearish. So we certainly have plenty of room if we stall here or if we take a spill lower. That's not my expectation, but we do have room for lower. On the breakout, higher 80 to 90 would be just shoot from the hip level based on the measured move. Here are the Bollinger Bands. We're above the 20-day moving average. We've been above the 20-day moving average for quite some time now. You know, we had the last CPI go our way. We had the ETF surprise. We had jobs numbers on Friday that were kind of all over the place that the market on the risk asset side didn't really like. But we're still above the 20-day moving average. Band's getting pretty tight here. So this is telling you we should see a move sooner rather than later. And based on how this is positioned currently, it suggests bullish continuation. It leans bullish as long as we're above the 20-day moving average. Alligator Fractal also crossed bullish with buy signal above 72, which is not a surprise at all. Looking at the 20-week, 200-day, and 200-week moving averages, again, we have a little room on the downside. As long as we're above the 20-week moving average, we are in bullish territory firmly, and that first occurred in October last year. In bull trends, we haven't closed below the 20-week moving average, unless it was basically the end of the rally. So it's unlikely, if we are bullish, that we get all the way down there and then we close down there. And if we do close down there, then it's probably for good reason, and that would be a reversal risk type of event. So we still have plenty of time. No rush. 62.7 is also a yearly pivot. Yearly pivot above us is 80.7. There's also this. You know, none of this has changed since many weeks ago at this point. But yes, it's all there. Chart patterns all over the place. High time frames, low time frames. Same thing. Inverted head and shoulders, cup and handle. It's the same type of fractal you're seeing on the low time frames. They both measure to the same place. This would be a cycle target. This is not a breakout target this week, this month, or probably even this year. This is probably a 2025 cycle target. I like 333 by July 2025. Here's the pitchfork for the range. Dead center here, right where you'd expect us to be. Not overbought, not oversold. Plenty of room in both directions. We just really need a catalyst to kick us in one side or the other. 2-year moving average multiplier also looks great. Plenty of upside. Currently at 160. This is going to continue to move higher as price moves higher, just like it did in 2017. So not much has changed, right? You know, we're still bullish. The power law corridor looks fine. We're still below the midpoint, or whatever you want to call this, on the power law corridor. We don't typically move past that midpoint until many weeks after halving. So again, we're pretty early. And to see us maybe fail here or continue sideways for a couple weeks even is not out of the question. It doesn't give me a reason to abandon the bullish thesis, you know, being down 2% on Friday. That's okay. We can continue to range. I've also been following this BITX chart, 4-hour. This is the 2X ETF, trying to break out of this 4-hour cloud. This will be a good sign. We had previous excellent moves on the 4-hour, so it's certainly something to keep watching. Definitely don't want to see this. Let's say below 40 would be unfortunate, right? Because it's currently leaning, trying to be more bullish on the 4-hour. You've got coin on the 4-hour also trying to be more bullish. You'll probably get a bullish bullish Kumo twist on the 4-hour there. And you can see these previous 4-hour moves have been fairly decent for bullish continuation. Here it is on the daily. You're waiting on a bullish TK cross. That'll probably happen this week as long as price doesn't break down. And once again, you have the same type of fractals, cup and handle, inverted head and shoulders, right? This may take another 2 weeks, 3 weeks, but it looks fine. It certainly doesn't look bearish. I see people looking at these charts using the same system I am, saying that this stuff's bearish, and I don't get it. Even MSTR also setting up for the same thing. Cup and handle, bullish TK cross. The premium to NAV makes 0 sense to me, but this looks good. Even WGMI, which I don't have a chart for, the mining ETF above the daily cloud. As long as we're above the daily cloud, bullish continuation is the name of the game. ETH on the weekly cloud, same thing, right? Cup and handle, blah, 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 inverted head and shoulders. All of that is there. ETH needs a higher high, much like BTC does, to get it going. But there's really not much else to say. You could say, well, we're going to stay ranging from 26 to 3,600 for the next 4 to 10 weeks. I don't know. Like, yeah, sure. That could happen. Do I have any bets on ETH currently? No. Do I have big bets on ETH currently? No. Right? Like, so you just have to size your confidence accordingly. If you are hyper bullish ETH and you think you're going to get a massive breakout, then take the trade, right? I don't think that's the case currently, but I didn't think that was the case pre-ETF announcement either. So sure, it's possible. I don't think it's probable, but it's possible. Here's your same thing, cup and handle, inverted head and shoulders. It's all over every chart. Just as I can't be bullish until something like this clears itself. You know, I'm not bearish until this fails. I'm not bearish on BTC until those patterns start to fail. This was a low time frame head and shoulders breakdown for ETH. Tried to pull up, failed, broke down, didn't quite reach the target. Now it's trying to pull back up. Obviously a massive ranging mess since the ETF announcement. ETH BTC remains below the 2-day cloud, below the 400-day moving average, and inside of the downtrending pitchfork. So probably lots of sideways left in that one. Sol back above, well, barely above the daily Kijun here. And the farther you go down the market cap table, the less bullish things start to get very quickly. Outside of the top 3, top 4, BNB, ETH, Sol, those look fine on the daily cloud. And further down, it gets a little loose. There's very clearly not much of a bid on alts, especially when things spill lower, especially when we're seeing DeFi liquidations or something. There's really no one on the other side of that trade. So that's why you'll always see, at least in this type of environment, you'll see alts down 20 when BTC is down 2%. So you definitely have to be careful of that. It still looks okay to me. Doesn't look bearish yet. Below the cloud, when the cloud signals are bearish, that's the time to get bearish with a bearish cloud. We haven't had a bearish cloud on Sol since mid 2024, right? It's not even on this chart. Sol ETH is still a very interesting chart to me. You probably get a bearish 5200 cross on this. This probably fails as a pattern, but then there's going to be some sort of weird ETH outflow, ETH death, where this chart might pull back up. Just something to keep watching, especially throughout the cycle. And then it's kind of the tale of two cities. You've got something like INJ that looks like it's trying to break out for the past 3 days. Pretty decent. Inverted head and shoulders, trying to get back above the previous range. And then you got stuff like IMX that just looks real bearish. There's probably 50 variations of this chart as you go down the market cap table. For me, I just can't get bullish on this until it's back above the daily cloud with a bullish cloud. That's just my system. Okay, you've even got a death cross on this. You've had one for a couple days now. This doesn't need to break down to be bullish again, but it certainly needs to get back above the cloud at the very least. So there's clearly a head and shoulders pattern on here. And like we already know, there isn't really much of a bid for alts. So if BTC gets angry, if BTC goes to 67, IMX is going to $1. I can almost guarantee that. It's not going to hold 180. So I'd certainly be mindful of that this week. On the legacy side of things, we look fine on the cloud. We're at all-time highs, right? Again, I see a lot of people saying they're short, they're bearish. That's fine. We're not quite there on trend metrics. Am I excited about buying anything that looks like this? Absolutely not. Now, this could be a double top here. This could be double top fractal here. This could be a eventual head and shoulders. There's tons of bearish stuff that this could be, or it could just do nothing and range in the 5,000 level for 3 months, right? Who knows? But I don't see anything here that's screaming at me that's just bearish enough to start shorting. And then there's Apple, which is back to its all-time high. So just as NVIDIA is starting to slow down, Apple's right there. And they have some sort of developer conference this week. Tesla has some sort of annual meeting this week, I think, with the Elon vote, along with FOMC, we probably see a decent sized move on Tesla this week. I don't think it's going to be bullish. I am positioned for a bullish move based on the technicals. So I'm happy to be wrong here. My money's on 200 plus. My money's on this being an inverted head and shoulders. The cloud likes it. I'll be happy if it plays out. I'm not super confident in that call. And then lastly, there's still plenty of stuff on the legacy side that looks like PayPal, where, maybe not the best company in the world, maybe not the sexiest company in the world, but it's been down only for 3 years, just grinding lower, lower, lower. You've had falling wedges down here. You've had inverted head and shoulders down here. The high time frame cloud finally starting to slowly grind bullish. So I like taking a stab on stuff like this and then adding eventually on a breakout. So there's something for everybody. If you're bored with Bitcoin, if you're bored with staring at moves from 66 to 70, there's plenty of other stuff to do. Or nothing, touch grass, touch water, talk to your family, read a book. There's plenty of other things to do out there. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.